Hello guys, welcome to Koi Academy, and in this video we'll be talking about what is Ponzi scheme. So a Ponzi scheme is a fraudulent investing scam promising high rates of return with little risk to investors. So if somebody says to you that okay, invest $2,000 and I will pay you back $10,000 in 6 months and there is no risk to it, there is a guaranteed this is the guaranteed return, then keep in mind that that's a Ponzi scheme, because when you invest money in something, there is always risk involved. It's not 100% sure that you will get a certain return. You could also lose your money. So Ponzi schemes generate returns from for earlier investors with money taken from later investors. For example, if somebody, if a Ponzi scheme operator, he took money from some investors in January and he promised them return in June. So what he will do is that meanwhile in these 6 months he will basically tell to more people that this is how he is going to generate money. So within that 6 months, he will take money from later investors and he will pay back to the earlier investors of January. So in a sense, he is not investing the money in real things like real estate, shares, bonds. No, he's just paying the later investors from the money. He's just paying the earlier investors from money taken from later investors. So that this process continues as long as the Ponzi scheme is operational. So remember that this scheme was first introduced by Charles Ponzi, a US-based scammer in 1919. So his scheme also failed within a year because people soon come to know that this person is not making any real investments. What he's doing is that he's paying the earlier investors from money taken from the later investors. So these schemes often fail, but these scammers, they keep on keeping a commission from themselves from every tranche of money which they receive from later investors. So this is how they make the money. Now remember that Ponzi schemes rely on a constant flow of new investments to continue to provide returns to older investors. So what they do is that they provide return to investors, be it tenfold or 20-fold, by simply taking money from earlier investors. They don't invest in real stuff. So they promise you that the return is 100% guaranteed, but it's not. What happens is that after a few months, when people come to know that it's a fraud, it's a scam, then all of a sudden this scheme collapses and people lose a lot of money from this. So these are the red flags, that if somebody promises you high rate of return and they say that okay, you're not going to lose money, it's 100% sure that you will get money, then bear in mind that this is a sort of a Ponzi scheme, however different the name may be. So that's it for now. Do subscribe to the channel and thanks for watching.